What's up, YouTube? It's Joe Catapaglia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm going to do a little bit of a recap. It's been a while. I have a lot of new people watching the channel, quite a few new subscribers in the last few months. So I wanted to go over basically what my five favorite sites for fractional real estate investing are so far. It's not saying a lot, right? By me saying it, they're my favorites. Mostly it means I've been willing to put money on them. It doesn't mean that they're the best. You definitely want to do your own due diligence. In the description to this video, I do have links to all the places where I'm currently invested on. So if you see any of these that you want to get to, you can get to there. I'm also going to mention just some of the ones that I've decided against investing on so far. And then give you a little bit of a recap about each one, why they stand where they do, as far as my list of favorites. I think if you watch, on a regular basis, that this might not be an extremely beneficial video for you. I think my feelings are pretty clear. Although if you just look at the volume of videos I put out over about one platform to the next, you might be a little bit confused. But so one of the things I wanted to do is I just Googled, top fractional real estate investing platforms just to take a look at what they came out. I thought it was interesting. Mogul is a sponsored link. They are on my list. But then you've got Fundrise, who's really not a fractional platform. Picasso, it is fractional ownership, but in a different way. So I wouldn't count them either. But like, a whole bunch of stuff that, I don't think fits. Okay, Lofty does. Ground Floor does, but one of the things that I thought was interesting is Arrived wasn't on the first page, Arc 7 wasn't on the first page, Real Bricks wasn't on the first page. All of those, I think, are true fractional real estate investing platforms. They're all ones that I've decided against investing on currently because just their stated, excuse me, their stated returns are not. Yeah, I don't think they're sufficiently high for me to want to invest in something, relative to the risk that's there, right? So I think that all of those platforms have very low stated yields, and then tell you you're going to make your profit on the back end through appreciation, and I don't buy that, and that's what a lot of them are sort of, that's where that's the way those are built. Um, and then, you have all these ones like Roots and like Home Casa, I think was one. There's several that, are pretending to be fractional real estate ownership, but what it really is you're either investing in a private REIT or you're investing in a fund or something like that. And so those don't make my list either. What I want to do, and if you're relatively new and you've only caught a few videos, you might not know this. I want to pick individual properties, be able to do my due diligence on that specific property, and decide to invest or not. So I don't want to, I'm not interested in a fund model. I don't mind if there is a central platform that's picking those deals, but I want to be able to do my own due diligence on the individual property and then decide for myself, is this a deal or is it not? I don't want it to be lumped into a pool with a whole bunch of other properties, where it's difficult to do due diligence. Maybe there are additional layers of fees that are somewhat hidden or costs. And so that's why I'm really interested into the fractional platforms. I also don't cover any of the ones that you need to be an accredited investor. I just don't think that's who my average viewer on here is. I don't think that they qualify. And so it doesn't make a whole lot of sense to be covering all these, any of those platforms that most people who are interested in fractional real estate are not going to qualify to invest in those deals. So to jump right into my list, and these are in order, right? I'm going to tell you my least favorite one that I'm currently invested on, and that's Collab. Um, I only bought one piece of one property. It's this one. I own the minimum amount of this one, so I don't have a ton of experience with them. The reason that they make the bottom of my list, but I actually did invest. I like their model. It's student housing. They are selling an actual security, so I think that from a regulatory standpoint, um, you have a little bit of protection there. Although it seems like it's not the same type of registered security that you see on Arrived and those ones. It wasn't really clear to me reading it if it is or not. If they're using a different type of different way that they're doing it, but I'm not really here to, to interpret the legal interest that you have in each one of these. Um, my real goal is to share the way that I do due diligence on properties, to share that real estate experience, and then to just let you know how I'm doing. I've been now investing on all on several of these platforms, going back. I think I made my first investment in September of last year on one of these platforms, and then I've just been really spending almost every day. Spend a little time digging into new ones. So if you know of other ones, I'm always interested in looking. But so my real issue with Collab is they give you very little transparency into the finances of the property. I just did a recent video on this one, and it looks like they're paying out a distribution that's higher than the net operating income, and I can't figure out how they're doing it. I don't know if they're paying it out of a reserve. It's not showing up. Either that or my math isn't working with the way I think that their, total investment works. But regardless, when I have a hard time figuring out how I'm making the money that I'm making, it always makes me a little bit nervous. They also have like a lot of little inconsistencies with their offering circular or what that document and what they actually put on the website. A lot of times they've had little discrepancies as far as like number of rooms or a whole bunch of different things. Year built, the types of things that it makes me a little nervous that they get it wrong because it's like foundational info. But what I do like about them, I do like it's that it's student housing. They have a really interesting way of trying to manage properties where they have like these automated tasks that anybody can sign up and go, through their task center, sign up as somebody who performs tasks at properties. And then like you could, I could sign up and then go fix something or go, whatever it is. And so it's a really interesting model. And I think that that's the collab probably, I've been thinking that that's short for collaboration, right? Like they're trying to work together with, like if you're a tenant, you can do this. If you're just somebody that lives nearby, but I don't know. So I think it's an interesting model, but so far the numbers just don't really work for me. And most of their deals are relatively low cash on cash returns. Like this is a 7.5% dividend. I can't even understand how they're paying it, but they are. But they're saying, most of your return comes from appreciation. Well, that's how, that's one of their best deals from a yield perspective, and most of them are even lower. And so that's why I'm not super excited about the platform. They did get some of my money, so they made the list, right? Top five, because I've there's only been five that I've been willing to put money on. Well, I put money on Landa, but I took it right back off. During my due diligence on that platform, I realized that it was going to be problematic. Very glad that that came across the information that I did because I think a lot of people got money trapped on that platform. So collab, that's number five on the list. Number four, ground floor. Now this is one of the reasons that you don't just want to take my word for, is a platform good or not. Probably 7 or 8 months ago, I was telling everybody ground floor is my favorite, right? Like this one, it just makes a ton of sense. You're buying little pieces of mortgages. They are securities. You're getting paid a pretty high interest rate. The risk adjusted returns seem great to me. All that is still true. But what I was trying to do is build it's all short term loans though. So I didn't want to have to do a lot of due diligence on each loan because it is short term. And so instead, what I thought I would do is buy a little piece of every single one and get some really broad diversification, or maybe not every single one. I had a little bit of a idea of ones that I might start ruling out, but for the most part, just really depending on having broad diversification on here for this to work. And I had gotten up to about 120 loans on the platform. And then over the course of like 2 or 3 days, they just artificially paid off about half of them to move those loans over into some other product. Um, that was extremely aggravating to me, right? And I've slowly built up, another 10 or 15. I think I was down into the 50s from 120. So I think more than half of them. And so, it seemed like that they did it with no real concern for like, okay, what is this doing to their clients? And then there was like they had no new loans on the platform or they just got bought out real quick. So I actually, if you look at I actually just took money off at that point in time because I had money just sitting there and not a ton, but with the strategy that I was using, more than I'd want to put into each loan that did show up. And so Now I'm starting, they're having a little bit more consistency again with new loans I can put money into. But it was pretty frustrating. It makes it, because the reason I really liked this one is how dependable. Like I was buying loans every single week. I was starting to get payoffs every single week. Uh, you know, on the path to building a very diversified portfolio, and then they just artificially like took out half the loans. And yes, I got paid in full, the plus the interest that was due up to that point. So it wasn't as if I lost money. But I ended up having a big chunk of money that was uninvested and no reasonable way to get it reinvested quickly unless I wanted to use their flywheel product, which is a REIT, and it's for the reasons I mentioned earlier. I'm not interested in investing in REITs. I don't want to have the additional layer of expenses. I want the ability to look at individual loans because, like I said, even though I was buying a little piece of every single one, I was starting to come up with some ideas on ones that I might want to start to rule out, which is the way I was approaching that one because I do want to do minimal due diligence, but I want the ability to actually look at the house, look at the loan that's being made, look at who the borrower is, and then over time, I was expecting to develop some tools to rule some of those out. I don't know why my picture's down here today. I'm going to move it up there. Sorry about that. If you're used to me being up here, it's kind of weird. I didn't even notice that until now. Um, so yeah, that's ground floor. It's still pretty stable returns for the money that I have in there, but that situation just really turned me off. And they actually had done it to a smaller extent several months earlier. But that one, and maybe it was actually to the same extent, but I just didn't have a big portfolio yet. But if they can't provide that sort of really consistent schedule for me in where I can just lose half my diversification over the period of a few days because they want to move those loans into another product. It's just, I don't know. I think that it was a terrible decision on their part. Clearly, the LRO investors are, not their main target audience, or at least it feels like that to me. They really are trying to push their flywheel portfolio and some other things. So anyway, that's why they make fourth on the list. I actually think for the right investor, they could be a good option. But for me, for what I'm trying to do, it just doesn't make a lot of sense. Third place is Lofty. If you watch a lot of my videos, you're probably surprised this is this far down. Um, they've let me down on a lot of things. I feel like they have, they've just been slow to react to a lot of problems and whatnot. They have, I think, of all of the platforms, one of the most interesting models. They're a marketplace, meaning the company themselves is not, they're not putting the properties on the platform. It's third-party sellers, or third-party, what they call co-owners at this point, moving properties to the platform. Um, and they're the only place that has a true, back end liquidity right now. Well, I guess Arc 7 does, but it's not nearly as robust. And by secondary market, I mean, you buy these when they first get brought to the platform, but at any time you can sell your tokens. The reason they're not higher on the list, they're the platform that I spend the most time on and I've put the most money on so far. Really, the main reason is if you use it as a trading platform where you're in and out of properties quickly, where you're really looking for that deep, discount because at certain points people are just dumping tokens at a cheap price, you can make very good returns. Um, but on average, the average user on this platform appears to have lost money, right? Their average token price is somewhere around $35, even though they get brought to the platform at 50, meaning people on average have lost pretty close to 30% of their value. Some of them maybe have collected rent along the way, although the average yield is pretty low as well, even though their stated yields are very high. And so I think they could change a few things and very easily be my favorite platform. But what they really don't do is they don't do any sort of filtering of deals whatsoever. They're basically have come out and said, if it's legal, we'll put it on our platform. And I think it's a terrible way. so it's really like the eBay of real estate, right? Anybody can come on, put any property on there. And so then the onus is really on you to figure out, is this a deal that makes any sense? And surprise, surprise, I would say 90% plus of the deals that get brought to the platform are not something that I'd ever invest in as a real estate investor in real life. At least not at the prices that they're brought to the platform. Some of them might make sense if you got them at a 10, 20, or 30% discount. And that's where most of the investments that I'm making on the platform, that's where they stand. I mean, there are a few exceptions. But for the most part, this is a platform um, that it just doesn't make sense to me when your average user is going to lose money. How now, I guess if you look at it as if you're just providing a service to the people bringing the properties to the platform, they're doing a great job, right? Because those people have made money. I hadn't really thought about that as much, right? But I think the average person that brought a property to the platform has probably done pretty well, right? They probably sold it for significantly more than they should have been able to. Some of them it's not true though. Some of it's actually just the function of the platform itself that's like led to the downfall of some of the properties. But a lot of them, I mean, and they even let they're brought to the platform at a 5% premium to the appraised value, right? So I mean, I don't know. Anyway, it is. I think there's a lot of potential there, but until they're willing to do something in the way of selecting properties, creating. I think I know they're worried about the regulatory consequences of doing that, but I'm certain that there are ways around it, and I have several ideas, some of which I've tried to mention, but they don't actually ever seem open to it. But I think that there are ways that they could very easily attract the right kind of deals to the platform. Unfortunately, it doesn't seem to be their main focus, right? They want to just get deals on there, get them sold, but not really make any judgment on, whether it's something that anybody should be interested in buying or not. And so that's why I say like they're very much like the eBay of real estate. Like eBay doesn't care if you're selling your old trash, which is what a lot of people do. Um, Although at least on eBay you have some good return policy protections and whatnot. But anyway, that's why they make third. They're doing better for me than I like them more than Collab and Ground Floor only because I'm actually able to make good returns. But the returns I'm making are almost all at the expense of somebody having lost money, right? Somebody bought the token at 50, which is the ownership interest on this site. They bought it at 50. It's down to I bought some at $8.50 the other night. I think they're probably worth 15. I'm going to make a good return on those, but the person who bought them for 50, they got crushed, right? And so that story is happening over and over again. It's helping me make money, but it is not helping, overall. It's hard to see a future of the platform when that is the story that occurs over and over again. And they really don't seem to have an understanding of how one, it almost seems like they don't think that's a problem, right? They're like, well, we just can't do it, right? Regulations, we can't judge that investment at all. That's just your job. I guess they think the market is going to figure it out. Um, it just doesn't seem realistic to me. So I don't know. I'm really hoping that it gets to a point where it's a platform that makes a lot more sense. I think that like I said, with a few tweaks, with the right, aim at like if instead of 70 or 80% of your properties being dogs, if you got to a point where at least on average your deal was a good deal, maybe maybe you do have, not perfect filters, so you still have 30 or 40% of deals that are just going to get crushed like most of them have. Um, I think that could work for people. But I think that as a platform that just keeps bringing on these, what I really think of is just either trash properties or, some of them are very nice properties, but it's just not a good investment. Like it doesn't make sense. You're just not going to make money, relative to your other options in the world. So anyway, that's why, you can tell I'm really torn about it, right? Because I really like having the secondary market. But The other thing is that secondary market wouldn't be very important. It wouldn't be very helpful if it weren't for the fact that people's tokens do just take a dive from now and then, right? If I wasn't getting a huge discount, would I really care that much? It's not like I need the liquidity, so I don't know. But that's why that sits at third. Solves lot. This is one, to be second is it's kind of funny because it's one of the newest, or it's probably of these the newest platform. Um, I've bought five properties on here, or interests in five properties on here. I've had three pay off so far. I've got two that haven't. This is another. It's a very interesting product. It's the DAC is a what is it? A digital assignment contract is what I think that the DAC stands for. But you're basically having you're getting an equity interest. They're doing a forward sale in the property and just a piece of the property, and so then when the property sells in real life, because most of these are properties that are either already listed for sale or about to be listed for sale, and so they sell you a little piece of their equity at a discount, but you don't get paid until the property sells in real life. I think it's a really interesting. I think it's the most innovative product out there. I think that there's a huge demand for it on the other side, like homeowners trying to, waiting to sell their property, needing some cash. I can see just there just being a tremendous market on that side. Like I said, I mean, they're one of the newest ones. I think there's maybe only one or two that I hadn't bought. So they might have done six or seven or maybe a few more than that before. But I mean, I've bought five of them. Three of them have paid off. They've been extremely good returns, the ones that have paid off so far. I've done videos on all of them because of the short-term nature of the product. Um, you know, like this one says, okay, you get a 14% return, but you get paid that return. And I think when I calculated it, I really got like 13.88, unless that's not the one. Maybe it was a different one. But it happens so quickly. You're getting that ROI, but you're getting it in a couple of months, and so your annualized returns on these deals are just really amazing. And so even though they are so new, they're really my second favorite platform at the moment. I think if they get to scale, if they get to a point where they're putting a lot of deals on here, so that I can continue to churn deals, it will be an amazing product. It is the furthest from typical real estate investing of any of the ones that I've talked about. But it's, so it is innovative. There's definitely platform risk and model risk. Like, it's going to be interesting to see how this shakes out in the future. But at the moment, it's doing really well for me for the ones that I have bought. I think that they're taking a thoughtful approach as far as what they're doing moving forward. But it is really new. So well, it's yet to be seen. Second favorite, but I think they're a contender for getting a lot of my capital sometime in the future if they're able to keep putting out the types of deals that they have. I mean, a lot of them have just paid off in a very short period of time, at a good return. So that's where that stands. And then, my favorite platform at the moment is Mogul. I think this isn't a surprise if you've been watching my channel for a while. This was founded by a couple of guys who worked in Goldman Sachs. They actually have experience going out finding good properties, but they're not running a fund. This isn't a fund or a REIT. You get to pick individual properties. You get ownership in the properties that you want. And so, like you can see, I didn't buy any of the piggy bank, but I bought some of these two. I bought some of that one. I didn't buy this one. I bought some of that one. So I'm getting the benefit of them going out, doing the work, and finding great deals. But I also get to do my own due diligence. And if there's something that I decide I don't like about a deal, I don't have to buy it. And I'm not getting, and I'm not, each deal stands on its own. I'm not paying like some additional fees that are like layered across all of them. It's completely transparent as far as that goes. The reason I really like this platform is they just have, they're really good at picking good deals, right? Like in my mind, their average deal is better than any of the other platforms out there at the moment. They don't have a ton of deals yet. I think I've bought, oh, what do I have? Maybe 10 or 11 or something at this point. out of I think 16 that they've had since I started looking. So, I'm buying roughly two out of every three that they put up there. Uh, at the moment, they don't have a secondary market. There's no liquidity, so your money is trapped in there until the property sells in real life. They do have plans to fix that, but that they're just that, they're plans. Now, so far, they've been really responsive about adding things and changing things and really good about doing what they say they're going to do. So I believe that they will have that market worked out. Now, the timing of it and whether or not I like the solution is yet to be seen. It seems like they're going to maybe set a price and you'll have the ability to sell or buy, sell out at that point in time. So it really is just if you need the liquidity, it's there. But you'll probably pay there'll probably be some costs to that. And I don't know that you'll have the ability to buy like peer-to-peer trading. But like I said, I really like the deals that they're putting out. Remember, just because I like them doesn't mean that they're a good deal. You want to do your own due diligence on all the platforms, on all the properties. Just because I didn't pick up any of this one, maybe my reasons for not wanting to, maybe those don't match up with your investment thesis or your ideas about it, or some of them I'm really on the fence about. Some of them I put a little bit less money into. But overall, the guys that run this seem just incredibly professional as far as well, it's funny because they don't come across that when when they're doing their webinars and stuff. They're joking and having fun, and so not in that sense, right? Like they're not like overly buttoned up or something, but they're very when it comes time to actually talk about the business. I mean, they know their numbers, they understand the properties, they understand the markets. And honestly, they seem to have a better sense of who their customer is than any of the other platforms as well, right? Like, I mean, they really actually seem to seek out, criticism or thoughts or ideas from their customers, and then actually make changes, relative to what those what they've heard. Obviously they're not going to take every single piece that everybody tells them, but there's some of the platforms it seems like you just have tons of people shouting at the owners at a regular basis about certain problems that the founders just don't see as a problem or don't think it's a priority to fix. Where here they're like, oh, you want to do this little thing? Well, let's fix it and let's get that out today. So I think that just the general customer experience on the platform has been so much better for me anyway. And like I said, I mean, the real reason they're my favorite though is they are just picking deals that in my mind are good deals. They're picking markets that I actually want to invest in. They're picking properties that have strong yields with in-place income. Uh, a lot of the deals that are finding that are off-market deals, they're not, these are not deals that are easy to find. I should have mentioned this because I know a lot of you are new. Uh, my day job is a real estate agent. I run a small team. We help just primarily out-of-state investors that buy properties in San Antonio, Texas. So the types of deals that you see on here are very much like what we're trying to help clients find in my market. And it's tough to find deals that are as good as what they're putting out on a regular basis. Now they're looking at more markets than us, but like if we found, four or five properties this good each month, and I have a team of five, I'd be happy with that, right? And so the fact that they're able to find deals every single week to put out that are of a quality that I think are, investment worthy, really says something about what they're doing, right? And I think the biggest difference across from them, um, and it's actually true of Saul's Lot too. Like both of them are founded by people that were working in real estate that understood, um, the particular area that they were trying to do, and they said, "Hey, we're, we know what a good deal looks like," or I mean, especially for Mogul, that they were specifically finding these same sorts of deals at Goldman Sachs, and then said, "Hey, we could do this on our own, and we could sell equity. We could make it available to just typical people people like me sitting on the couch wanting to invest in a deal. I don't want to go out and do the work. I'm gonna, I do my couch due diligence on all of these, right? And that's what most of my videos are about, is how to do due diligence, how to like really try to spot problems that I think might be problematic. And that's why, any of the ones that I didn't invest in, it's because I saw something that maybe this is a problem. Maybe this is a reason for this property to underperform. It doesn't mean that I'm right, but it's, on average, it's me getting to take my own risks, right? And so that's why I like the fractional stuff. These guys could have very easily set up a private REIT. You'd have to invest, if you did that and you invested with them, it'd be easier for them to take fees, right? And it would be, I mean, they do make plenty of money in fees the way that it's set up, but it's once you do the private REIT thing, it becomes a lot more opaque to the investors. And then I'd be stuck with buying all the ones that they bought, right? And so, uh, you know, on average, now, am I going to be right about which ones are their worst deals? I don't know, but I think that I have a good sense about it. And I want to be able to make or lose money based on my own judgment, right? And so that's one of the reasons why um, a lot of times when you have those funds or REITs, one, sometimes they just get some pressure to buy stuff when they have that sort of setup because they have a certain amount of money they need to put out. And when they're feeling that pressure and they know there's not anybody that's actually looking at every single deal, right? Like on here, you can't go out and just buy a bad deal because you need to buy a deal because everybody's looking at that deal individually, and there's the chance of it not selling out is probably much stronger if there's really something wrong with it, right? um anyway, I think that I've said enough about why this one's been is my favorite. I am always looking for more platforms to invest on. I know a lot of times people share ones, and I'd say 9 times out of 10, when someone suggests a new one, it's either uh, a, a private REIT or a fund, or I mean, there's been some other ones, like there's ones that are like you're basically trading based on like the changes in markets, the changes in market price in certain places. I mean, there's all kinds of different innovative ones. For me, what I'm really looking for, I want to be able to look at an individual property. I know that I'm going to get some type of interest in that individual property. It might be just like full ownership like this, where it's, rents and appreciation. It might be ones like Saul's Lot, where I'm just, it's just a piece of the equity. There's no rent involved. It's just a discount to a sale price. It could be something like where it's like ground floor, where you get where it's a loan, but where I understand what the interest is, and I see the individual property, can do diligence on that property, and I just feel like it's much easier to do that than it is to look at a stock, right? Figure out what a business is worth, or to look at a REIT and figure out what a portfolio of properties is worth, right? Like, sometimes when you buy these public REITs, they might have hundreds of properties, or they might have a lot of commercial properties, which are much harder to value, much harder to figure out. And a lot of times, a lot of the numbers on there are kind of played with in a certain way. You know, uh, they have a lot of leeway in the way accounting is done, and so I started off my career in real estate working for two different public REITs, and I think that's why I generally mistrust REITs. Both of them are still public REITs that are traded today. There's people that have made plenty of money investing in them, but I think that there's just a lot of waste in that system. And I think it's like, as an individual, if you had to look at that and really understand what it's worth, it's close to impossible. But if I'm looking at this specific home, it's much easier for me to figure out what kind of a deal I'm getting. And so that's why I like the fractional stuff. Um, yeah, if so, hopefully, oh, if you are new and you're not already a member of the Discord, in the description of this video, there's a link to the Discord. You can join that. But that is it for me for today. Let me know what your favorite platform is. Feel free to put that in the comments or jump in the Discord and let me know. Hopefully, I'm always hoping somebody's got some new one that I'm going to be like, that one is perfect. Because I think that, every single platform has something I'd like to have a little bit different about it, you know? Um, and I think Mogul is getting there because, you know, for me, that platform, it's just the secondary market, right? Once that's added, I might just stop investing on other platforms, to be honest, except for the fact that I'd like to have some diversification across multiple platforms, right? You know, and that's just a platform risk issue. Anyway, until next time, I'm just going to keep making mistakes so that you don't have to.